Not going to make particular mentions of any strategy, so don't take that as advice or directly promoting any particular trading strategy. Okay, there we go. It's that simple. We have several events coming up. Rob keeps us in line with a lot of events, a lot of content, opportunities to be trained. And we also have Black Friday. I'm surprised that some of you are actually here rather than being off this morning at dark 30. Oh, shoot, Black Friday starts a month before, doesn't it? I mean, everybody's got their version of, pre-Black Friday now, and then it starts Thanksgiving and whatever. But glad that you're here, and there is a code for you to take advantage of Black Monday pricing on events or products through Rob, through the Wealth University. So guys, take advantage of it. Appreciate Rob. All right, I'm going to take this class a little different than what I sent out on the promos, but the promos for the class weren't very specific anyway. But here's the thing, things changed since I sent the last Tuesday when I sent in the outline for today's training. Things change. And I read something that tied into what I wanted to teach you guys today, and it was really powerful. And so I made some modifications. Just kind of go with it. You always know that I'm going to give you the very best, the very most important thing that I possibly can. And in this case, it would be slightly different what I said it was going to be on Tuesday, but hey, it is what it is. It's good. Guys, do y'all know the story of sleeping when the wind blows? Briefly, it's a story of, it probably has a few iterations, but the one I grew up with was a rancher who was trying to hire a ranch hand. He needed somebody to help take care of his ranch. And there was a few guys there, but he needed one more particular person. And the guy came in, he was an older cowboy, wasn't that impressive, kind of run down. And he said, well, what are your qualities? And he said, well, I can sleep when the wind blows. And the guy said, what do you mean? No, I can sleep when the wind blows. He said, what does that mean? He said, well, you'll find out if you hire me. Well, he wasn't that impressed with the answer, but he said, well, I just need one more hand. So yeah, go ahead. So he put him in charge of his horses, and everything was fine for about a week. And then suddenly a storm blew up at night. It was a horrendous storm, terrible storm. The rancher woke up in the middle of the night. He could tell from the noise that we were in trouble. He ran out, he ran to the barracks and pounded on the door of this cowboy who was supposed to be in charge of his horses. Nobody came. He looked through the window. He could barely see the cowboy sleeping with his back to the window. Knocked on the window. He wouldn't wake up. So the guy panicked. He ran to the stables. He ran to the corrals where the horses would normally be, and there was nothing there. And he panics. He ran to the barn. He couldn't even hardly get into the barn because the door was all barricaded up. Once he got in there, he found all the horses inside, bedded down, or taken care of for the night. All the windows had been boarded up, and then he realized, I guess now I know what he meant when he can sleep when the wind blows. Okay, I love that story. Turns out that the cowboy was lousy at fixing fences, and he didn't pick up the horse poop in the yard very well. But there was one thing he could do really good, and he could sleep when the wind blows. And in that case, in that circumstance, that was really important. That was really important. Okay. So you understand the concept of a one-trick pony? One-trick pony could be compared to a one-dimensional trader. So I got a question for you. Is it good or is it bad? And I want you to participate. Just to humor me on this. Is it good or bad to be a one-trick pony, to be a one-dimensional trader? There's only one thing I do good. Of all the things out there, I can do one thing. Is that okay in a versatile, dynamic, very wide-ranging market? Is it okay to be only one-dimensional? Yes or no? And there's no wrong answer to this. I'm curious what you think. Is it okay to have only one skill? All right, a few of you are saying yes. That's interesting. So the question, is it good or is it bad? Some of you are saying, it's okay. Well, I love a phrase that a friend of mine used to say to me. He said, nothing is really good or bad except by comparison. Okay? It's not good or it's not bad. It's just by comparison. So is it okay to be one-dimensional? Barry says one can still make money with a single skill if it works. And Will also said, if it works. Booyah. Of course, that's the qualifier right there. So if you only have one trick, it's okay as long as it's in context, as you say, as it works. Don't bring a knife to a gunfight. Okay, that's a power. It's kind of a bold statement, kind of aggressive statement, but it's true. I tell you a story. There was a fellow I worked for many, many years ago who made a lot of money in the market, trading, but he was mostly just an educator, mostly just a marketer, really, when it came right down to it. In some ways, he had made a lot of money, but he didn't have good sense. In 2000, when the markets went down in 2000, 01, and 02 for 3 years, okay, this guy was losing money. And he went to his trading department, and a friend of mine, I worked in the company, and a friend of mine ran the trading department. And he said, guess what? He came in and he said, start selling naked puts. And I said, why? He said, well, because we used to make a lot of money. We made as much as $200,000 a month selling naked puts. And it's true. I was there. I watched it. I saw it. $200,000 a month bringing in premium from selling naked puts. Well, things weren't working and we needed money. And he was losing money in the trading. So he said, I remember we used to make money selling naked puts. So start doing it. And his trading guy says, really? He said, yeah, just do it. Okay. Well, over the next few months, they lost hundreds and hundreds of thousands more dollars. Why? Because it was the wrong strategy. It didn't fit the market. Just because it had worked in the past didn't mean that you could just pull it out of your holster and start shooting and you'd hit something with it. It was crazy. It was crazy. Okay. One more story. I'm an Aikido practitioner, which is a martial art, Japanese martial art, and I've been doing it for 22 years. Okay. There was a fellow who came to one of my classes. He came up from Florida. He was a bouncer in the South Beach bars. So he and his buddy, and he weighed about 275 pounds, big boy. And he was bragging, he was a brown belt, but he was bragging that he had a move that he could throw 400-pound drunk guys out in the street every night. Not a problem. Nobody can get out of this. And so he demonstrated on one of the black belts, and sure enough, the guy tried to kick, he tried to headbutt, he couldn't do anything, and he was in a lot of pain. And this guy just walked him over and pushed him up against the wall. He obviously had total control. So there was about 8 of us in that class. There was about 8 black belts, and one of the other guys said, "Show me, do me." So he locked him up, and sure enough, I mean, every single one, he went through every one of these black belts. Everybody said, well, I can get out of it. No, you can't. And this guy was so confident, he would just walk them over and give them a toss, and they go flying onto the mat. And it'd be laughing. They were all impressed. This guy was amazing. Nobody could get out. I waited my turn, waited till the very end. And I said, hey, John, do it to me. You ready? He said, yeah, okay, take your turn. I said, but I'm going to count to 3 and I'm going to walk away from you. He goes, no, you're not. I said, yeah, I am, John. I'm going to count to 3. I'm going to walk away. Well, whatever. So he turned me around. He locked me up from behind. And guys, I got to tell you, I knew instantly I couldn't do anything. I couldn't kick. I couldn't reach him. I couldn't headbutt. And every time I moved, it hurt. My shoulder started to separate. And I said, okay, John, I'm going to count to 3. And when I did that, he just doubled down. And I literally, my right shoulder started to come out of its socket. It hurt bad. Okay. It hurt bad. And I said, okay, John, all right, here you go. Ready? 1, 2. When I said 3, he squealed like a little girl, jumped backwards, flailing at his chest or at his stomach. And he opened up his gi and his stomach was bright red. And I walked 2 or 3 steps away and I turned around and I looked at him and he's stammering. He's literally stammering, going, yeah, you pinched me. And I said, yeah, I did. I pinched you. Well, guys, my hands were behind my back and they were open, like this, like my fingers splayed open right against his belly. And I said, 1, 2, 3. And I grabbed 2 fistfuls of belly fat and I squeezed as hard as I could. And literally it just shocked him and he jumped backwards and he was just freaked out. Okay. Well, this move had never failed him. So he was confident. He was overconfident. Every time I grabbed somebody, not a problem. And John was just shaking his head and everybody was laughing. And I said, look, I'm sorry, man, but You just better hope that the next 400-pound drunk you tangle with in South Beach doesn't know how to pinch. Okay. Trader Will says a knife is more deadly under 5 feet than a gun. Will, it is proven. If you want the link on the video, I'll show you, but I'll bet you can look it up. It's more like 20 feet. If you're within 20 feet of somebody that's got a knife and you have to pull a gun, you can't do it. It's 20 feet. Okay, it's 20 feet. But seriously, guys, it worked perfectly until it didn't. That was the point. And I knew, I mean, there's some things I knew that I knew what it was going to happen. And in fact, I was taunting him. I was focusing him on his overconfidence by telling him that I was going to go when I said 3. That made him focus on everything except his belly, right? He was focused on squeezing my arms and my shoulders back. He was focused on anything I did, any movement, so he could be ahead of it. I had him focused everywhere except his belly. And when I hit, it was like stepping on a sharp rock on bare feet or walking into a spider web in the dark when you're scared. It caused an instantaneous, involuntary reaction. There was nothing he could do about it. And I knew that, right? So what's the point? Well, it's okay to be a one-trick pony. It's okay to be a one-dimensional trader. It's okay to have one thing that's the only thing you do and you make money with it until you don't. So as Will had said, as long as it's working, that's the criteria, guys. Now you're going to see where I'm going with this. Let's see. I'm reading a couple things. No more spiders after Halloween. Come on. Well, in the Northwest, is that the main point of Aikido? Point the adversary in the wrong direction. Yeah, you use the adversary's momentum and their strength, their confidence. You use it against them, Barry. In Aikido, strength, size, and speed have nothing to do with it. If a 95-pound girl can't throw me around like a rag doll, it's simply not being done correctly. You mess with you beat the person with their own brain, really. I utilize the things that I know that are going to happen in that person's brain to my advantage so that I don't have to rely on strength and speed and skill. Do I have strength and speed and skill? Yeah, maybe not as much as I used to. I'm getting a little bit older. I've been doing it 22 years, but I hope to be much, much better at it in 10 years than I am now. I can do much more with less and less. That's the point. And yes, you are working with what's called the startle reflex, and you redirect people's attention, their energy, so that you don't have to rely on strength. Pretty cool when you do it, right? All right. So let's keep going on this. This is going to tie together really nicely. So right here, what worked in one market, guys, may not work in the next rotation of the market. Just might not. What used to work in this situation may not work, even though the situation looks exactly the same. If there is no pattern, there's no trade. Now, this is something that is a little bit controversial but I stand by it. If you can't find a pattern that you recognize, if you can't find the thing that you're looking for as your trigger, don't force a trade. Don't guess. If it's not there, don't do it. Okay? If it's not there, don't do it. Now, here's the thing that changed my approach this week. Mohammed El-Arian, who's somebody that I've followed. I've listened to his commentary as an economist for many, many years. Okay? Economists are like weathermen. They seem to hang in there even though they're wrong. All the time they're wrong. The vast majority, like weathermen, they still have a job. These economists, they bring them out to fill in time on CNBC, and then time proves they're wrong. And then next time something happens, so you got the same guys out there making their predictions. Nobody ever says, I don't know why they do that. But, when you were on the program 3 months ago, you said this, it didn't happen. No, they bring them back on here. Here's famed analysts from such and such a firm or economists from, and they give their opinion. I think it's pretty disingenuous. Anyway, but El-Arian's kind of, in my mind, the real deal. He has a long history of being right. He's the former CEO of PIMCO. He's one of the best Fed and market watchers of all time, according to his peers and his critics. Okay, so given that, he wrote an article just a day ago for foreign affairs. He wrote an op-ed there. In that, he's saying something pretty significant. Now, I've heard a lot of dire quotes and comments about what's coming down the road at us, and I'm not saying that any of them are not true, but I'm also saying that, I get what they're saying, but has it happened yet? No. Does it have to happen? I've heard that before, but I don't know. Here's what he said in essence, and I'm not going to go through the whole article, but in essence, the world isn't just teetering on the brink of another recession. It's in the midst of a profound economic and a financial shift. He referenced, come back, there we go. He referenced the economic theory that a recession occurs when a business cycle reaches its natural endpoint and before the next cycle really takes flight. But he said this time is not going to be another one of those turns of the economic wheel. It's not going to be a normal rotation. He sees the world experiencing major changes that will outlast the current business cycle. So in other words, this time it's going to be different. Well, you know what? I'm not arguing with him. He guys has a habit of being right. That's not the point. The 6 most dangerous words in the English language are this time it will be different. In other words, Einstein saying repeating the same thing over and over and over again and expecting different results is by definition insanity. Okay? This time it will be different. Somebody who fails at something repeatedly, you kind of root for them because you think, well, if they keep trying this, eventually they'll succeed. Well, no. If they keep doing it exactly the same way and fail, then they'll always fail. Okay? But what he's saying is that the conditions he's seeing, he's predicting that this time it will be different. Now, he's been right a lot. So does it mean this time will be different? The answer is no, it doesn't mean it. There's a probability, but it certainly doesn't mean that that has to happen. I'll give you some examples. But he says 3 major trends are transforming the world economy. First is the transformational trend that says we are having a shift from insufficient demand, which is a slowdown in the economy, to insufficient supply. It's a whole different dynamic. The second is the end of boundless liquidity. We've had a crazy liquidity cycle for many years of free money, low interest rates, to try to stave off negative markets, right? And the third is the growing fragility of financial markets. Those 3 things, he said, are going to change this next rotation of the market, this next downtrend that we're going to have. Well, bottom line, guys, patterns are there are patterns that continue. There are patterns that happen, no doubt. And when the patterns come as they're expected, people say, see, there's the pattern. I told you, see, I get that. But here's an example. When Trump came into an expected market correction, what happened? Well, he went in and he changed the tax code. That caused a sharp spike in business activity over the next few months as companies repatriated cash. They brought in money from overseas. So that's stimulus, right? Yeah. So what happens when you have stimulus? Well, we're experiencing it now. It's horrible. When you have too much stimulus from the Fed, which is what the market, has done economically for the last year, you drive the inflationary cycle that we're in. All these things, this is well known. But they said, oh, this is all the stimulus that's going to cause all these problems. Well, it didn't. Boom, we had the biggest economic growth surge in modern history for 3 years, the biggest, strongest growth. And immediately the critics were saying, oh, this can't continue. It has to blow up because we have all this extra stimulus cash coming in. Well, this will make things work. You just wait. Finally, when it didn't happen and then continued to not happen, then the comments started to become, well, maybe this is just becoming a new normal. And then, well, maybe we don't have to have a recession. And then, well, maybe the economy kind of likes this and it's just adjusted because it changed. It didn't go the way it was supposed to go. And then boom, COVID. And then the thing that had just become the new normal, boom, it goes flat on its face. We go back to a stimulus, a government stimulus, and now we're reaping all the challenges and the difficulties that come from that. Only From a cycle standpoint, L-Arian is saying this time it's going to be different because of these three things, which are unique. When we have these things, it's not going to be a normal cycle. It's going to be worse. Well, you know what? I don't know. We may have a correction. It may be just like the last correction we had. It may not have a normal market correction. It may not be the correction when everybody expects it to be. It may come later. Guys, we may not have a correction at all. L-Arian, he's really smart, but it's not here till it's here. That's the point. Guys, I have trained people on the idea of trading what the market's actually doing, not what you think it's going to do, not what CNBC says that it's going to do, not what it ought to do. Trade what it's actually doing. Does that make it right, guys? Does that make sense to you? I know I can listen to L-Arian. I can listen to 6 other guys that say he's wrong, and 6 other guys that say he's way understating it. You can get opinions for any darn thing you want, but you can't change what's actually happened. When the market moves 28 points or a stock moves 4 points today and it hits a support level and stops, it did it. You can't argue that it didn't happen or it shouldn't have happened or it might happen. No, it actually did it. And if it did something that is significant enough, if it fits into your trading strategy, then you can do something about that. Guys, you got to be ready to do what needs to be done. If we have a strange or a market that is kind of different now or is more dramatic, you may say, yeah, but that sounds good, but I don't know what to do. What do I need to do? Well, you know what? That's a great question. That's a good point. So here's my suggestion. You practice. Well, what do you mean? You practice. Practice makes perfect, right? No, practice never makes perfect. Practice makes permanent. You practice doing the wrong thing perfectly, you'll get the wrong thing done perfectly wrong. Practice makes permanent. Perfect practice makes perfect because it makes perfect permanent if you keep practicing it. So how do you do perfect practice? Guys, you've got to be able to trade in the market and not die. You can't trade in the market in a practice environment and throw a bunch of money into it because you'll make mistakes. You're going to learn by doing. And if you make a couple of big mistakes and blow your wad of money, then it doesn't matter. I mean, you're out of options. You don't have anything to do. But if you practice in a simulated environment and you fund the doses, which means you do the dosing, you do the funding little by little by little by little. So you're putting a little bit on the line that you can survive, but you're learning by doing. You can go back in time. You can practice trade markets. You can trade through tough markets. You can trade through recessions. You can trade through volatile markets. You can trade through quiet markets. You can say market looks like this, and about a year and a half ago, it looked the same. Okay, what was going on then? It doesn't matter. If it looks the same, whatever was creating that pattern there is simply going to be creating the pattern you're looking at now. Chances are it's very, very similar. If it looks the same and it's behaving the same way, you can go back and practice trade through that with a strategy and then apply it to what you're doing now. You can study alternative strategies. Maybe somebody said, hey, I've got a better way to do it. Great, follow them. Take a look at it. Or maybe you look at variations on your own interests, your own strategies, the things that you're doing. But you've got to practice in order to be more than just a one-trick pony, or in order to have your one trick survive a changing market, you need to know whether or not that trick will actually work. And it may not. The thing is, guys, if you've got something that works in certain situations, then you have to allow for the fact when you're not in that situation, you don't trade. Don't force it. You may wait 6 months, a year. You may wait 1 week or 2 weeks before the conditions are back to where it's okay to trade the strategy, the one thing you like to do. When it's out of favor, don't do it. Mommy, it hurts when I do this. Well, then quit doing it. It hurts when I bang my head against the ceiling. Well, stop banging your dang head against the ceiling. Good grief, kid, figure it out, right? If you got a strategy that works, great. When the market changes, it quits working. Nothing wrong with you. Just quit doing it. Or, as I said, study alternatives. Try a different strategy, or try a variation on what you're doing. Pull the money out, trade just a little bit on edge, practice it, go back and back trade until you got it figured out. And if you don't have it figured out, don't trade. Real simple. Okay. Read, study, but don't let it get you overwhelmed, guys. There's no point in it. There's no reason. There's no point in being overwhelmed. Cycles will go through. Some down cycles will be longer or shorter. Some up cycles will be longer or shorter. You got to find something that works, because no matter what happens, there's going to be big winners. No matter what happens, there's going to be big winners. Who are they? People that adapt. People that adapt. Or sometimes the people that just check out. They, I'm just going to sit on my money. Now, that's a horrible strategy by most financial planners, and I am one, was one, am one. But you know what? When all the dust blows over and everybody's lost their shirt, you're sitting there on a pile of cash. Really nice when you can jump in there and start buying up bargains. Okay. Everything is in context, right? Nothing is bad or good except by comparison. You have to put in context. Now, here was the point that I was going to try to make today. Talking about a specific trading rule. But as an introduction to that, there's a rule for judging all other patterns or rules. Guys, in the market, you're playing patterns and you're using strategies, which are rules. Rules are strategies, and you're playing patterns. And you can trade by patterns, you can trade by strategies or rules. Sometimes you have both. Sometimes it's one or the other. But I love this. Sean McVay, who's this young, really dynamic, charismatic coach for the LA Rams, he said, you're only as good as your last game. Guys, indelibly stamp that into your brain. You're only as good as your last game. When people say, oh, that's a really good one, they're talking about candlesticks. If they're talking about comments on candlesticks, there's all kinds of stories and videos. Oh, this is a really good one. My whole career in candlesticks, which was pretty remarkable when you get right down to it, and I'm not going to pat myself on the back, but there's nothing I'm ashamed of, and there was a lot of things that I did that promoted the use and the better development and the better accommodation of candlesticks into the trading, Western trading style. And when I would hear people say, oh, that's a really good one, I just love to grab them by the nape of their neck, figuratively, get right in their face and say, really, how good? Oh, it's really good. How good? Well, no, I don't. How good is it? Is it 60% accurate? Oh, no, it's better than that. How much? Well, is it 85%? Well, I don't know, maybe, probably. No, how good is it? If you're telling me this is good and I ought to use it for trading, how good is it? I want to know. And the fact is, they didn't know. They didn't know. They ought to have known, but they didn't know. Really. When was it good last time? Is it perfect? Well, probably not perfect. Really? Well, when was it good the last time? How many times in a row was it good? How many times out of 10 is it good? How many times out of 100 is it good? And how many times over the last month was it good? If you're going to trade something, tell me it has some value. You better be able to answer those questions. So, Mr. Indicator, rule, or maxim, how good are you? I don't care what it is. Any rule, any maxim, any pattern, any indicator, how good are you? What have you done for me lately? That's a little play on a colloquialism, on a song. What have you done for me lately? Lately, recently. How good are you recently? So here's what I wanted to talk about today. The 357 rule. Some people call it a rule. It's actually, technically, it's not a rule. It's just an observation. Okay. The 357, what is it? Well, it's the rule in air quotes that says patterns repeat themselves 3 to 5 times, occasionally up to 7 times. That's pretty rare. That's where the 7 comes in. It really should be 3 to 5, and that's what it is. Most people talk about the 3 to 5, and if you push them, they may know about the 7 or not. Doesn't matter. Patterns are defined by the 3rd iteration, guys. If you don't have 3rd iteration, you don't have a pattern. If you have 2 iterations, you have a line. You can draw a line between any 2 points. It doesn't mean you have anything. But if you can draw it through 3 points, 3 iterations, 3 events, now you got something that you have to pay attention to. Okay, so this is considered a rule that is good enough to where you better know that it's there. But don't assume that it's a rule, because it's not. It's a rule of thumb, very loosely. It applies basically to everything, anything that has a pattern, whether it's downtrend, uptrend, wedges, triangles, rectangles, any kind of pattern trading, you look for the 3 to 5 rule. Okay. Now, one characteristic, it often decreases in strength over time. So if the pattern is surging up 20 points and pulling back 10 points, and surging up 20 and pulling back 10, if it goes 3 to 5 times, it's likely that on your 3rd, 4th, or 5th rotation, instead of surging up 20 points, it may only go up 15 points, and it may pull back 10 or 12 or 8 or 6. In other words, it starts to deteriorate over time. The longer it goes, it starts to get less effective and kind of lose some of the sizzle on the steak, if you will. That's the characteristics of the 3-5-7 rule. Now, chances are you've heard of it. Chances are this is not brand new. I get that. That's fine. But here is the point. We go back up and we say the rule for judging all other patterns and rules is you're only as good as your last game. Okay? Can you take the 3 to 5 pattern rule, the 3-5-7 rule, it was called 3-5, the 3-5 pattern? Can you take that and apply it to any stock? That's a question. Could you apply it to any stock? Somebody type in yes or no. It's a trick question. Just type in something. You know, I'm not going to embarrass you. But I need to make a point. Can you apply the 3-5 rule to any stock? Yes. Can you apply it to every stock? Yes. Is it relevant? Maybe. Nice. That's the right answer. Nay, maybe. Barry, Will, you guys are spot on. Is it relevant? Maybe. I don't know. Could you apply it? Of course you can apply it. But does it mean anything? I don't know. There's no way to know unless you do a little bit of analysis. You've got to apply it. If you applied it and a year ago, this thing was nailing it for several months, that's awesome. Is it relevant to today? No. No. Can it be relevant? Yes. If it is, if it has been, when was it relevant? If it was a year ago, that's great, but I don't really care. I mean, I care, but I'm not going to trade off of it. You look at a pattern or an indicator as it fits the trading history. Did it work in the past? You got to check that box. Yes or no? Did it work in the past? Yes. How good was it? Oh, that good? Very consistent. About like 80% of the time, it's very consistent this way. Nice, nice. Is it still working? Has it been consistent over the last month, 2 months, 3 months? That's where the rubber hits the road, guys. Now, I don't care if it's a rule or maxim, indicator, whatever it is, this is the rule that overrides all other rules. You're only as good as your last game. Sean McVay. This indicator is only as valuable to me as its last few iterations. Were they recent and were they accurate? These kind of observations, guys, support trading decisions. They don't make trading decisions. They support trading decisions. Okay? They support them. The question is it still working recently? You've heard the phrase, the past is prologue. Past is prologue. What happens in the past is prologue. Yes, it is. The most recent past is the most relevant. When you look at something, you want to say, how good is it? If it's 70, 80, 90%, is that good? The answer is, yeah, it's impressive. But don't forget, your odds of success every time, unless this thing is 100% accurate and has been for years, that's a rare bird. In fact, it doesn't exist. There's one way you can answer that. It could be, but it's being snarky. Truly, nothing is that good, but it can be impressive. If it's 70, 80, 90% accurate and it's done it recently, I'm impressed. I really am. I'm going to use that in making a trading decision. I'm going to make it, but it's going to help inform that trading decision. But the odds of success next time are 50%, folks. Yes, 50%. But what if it's been right 9 out of 10 times? Okay. So it was wrong 1 out of 10 times. Yep. Does that time when it was wrong have to happen every 10 times? So it's wrong on the third time it predicts? Unless you can find that pattern, you don't know when the next miss will be. You do know that it can miss. So every time you go to use this strategy, this trade, this maxim, this pattern, every time your odds are 50%. Even if it's right 9 out of 10 times, this next roll of the dice, this next iteration that you do, the odds are 50%. Does everybody accept that? I know not everybody has heard that. If something is 90%, you want to believe that you have a 90% chance of it working next time. Baloney. Baloney. Your odds are 50-50. You get that? It almost sounds counterintuitive, but my friends, it's the way you have to trade. You have to trade neutral. Unless you can realistically expect that it will be perfect every single time. If it has a failure history of 10 or 20% or 30%, it's impressive, which means your odds of it working next time are 50%. It's a coin flip. Okay. Will says it's a flip of the coin. That's right. If head 5 times in a row, the 6 times will be head. Maybe it's 50-50. I kid you not, guys. You may say, well, the odds, okay, fine. You can describe that any way you want, but truly the real odds, it's 50-50. You don't know what the sequence, because there's no sequence. A cumulative total of 90%, 80%, 70% is a cumulative total. It does not reflect sequential behavior. Now, if you can find that, you have a new pattern and you have something very valuable. If you find that this thing is right 8 out of 10 times, and it consistently is right 5 times, then it's off 2, then it's on 3, then it's off 1, or 2, and then it's off 1. And that pattern rotates. Now you got something. Okay, I give it to you. Now you could probably trade off of that with a higher probability. If that's never failed, if that always works, it goes, no, I gave the numbers wrong. It's out of 10. So if you go 5 and then 2, that's 7. And then 2 and then 1, that's 10. So if the pattern works 5 times, it's off 2 times. It works 2 times, it's off 1 time. That's 80%. Now that pattern itself repeats over and over, and you go back in history and it never fails. Wow, you've got a gold mine, right? You really do. That's amazing. But nothing has a sequential history like that. I've never seen one. Which means your probability, your odds have to be looked on as 50-50 every time. Will that indicator work? Maybe. It's worked really well in the past. Great. You go into it as a 50-50 proposition. Why is that important? Guys, if you were trading the market 50-50 odds, I wouldn't trade the market 50-50 odds. Yeah, but you said they're 50-50. I know. But 50-50 isn't good enough. You see, there's 2 things going on here. I have to trade using my exit strategies, my risk management based off of 50-50. Okay. But if I truly believed it was a 50-50, I wouldn't trade. That's crazy. Throw your money up in the air and you got a 50% chance that it'll come down. Period. As opposed to being lost completely. No, that's not a good way to trade. That's crazy. But you find something that has a 60, 70, 80%, maybe even a 90% history of working a certain way. Now you take that probability and you do your exit strategy, your cost management, your risk management based on the fact that you don't know which one this will be, if this will be the one that it works the 6 times or the one that it doesn't work the 3 times or 4 times. whatever that is, you have to have that reality. You can't lean on indicators. You can't lean on patterns. You can't lean on trading rules. You can't lean on maxims like that, any of it. You can't lean on it with the assumption that it's going to work. That's a probability. That's a reason to make the trade. But you manage that trade with the 50-50 odds. And you have to have the trade management set up that you can survive that, assuming that it doesn't work. You can only give it 50-50. You can't say, well, I really think it's going to work this way, so I'm going to put a much bigger risk on it. Guys, all it takes is one of those to set you back, sometimes permanently. It's crazy. All right, so recap today. What was the point? The rule that overrides all of the rules is you're only as good as your last game. Everything has to be kept in context. When we talked about Arian and his predictions, he's very good. He should be listened to. I listen to him. And I'll watch for what he's predicting. And if it happens, I'll give him credit. Man, he sure saw that coming. That's great. Because I had that as a possibility. I had a strategy set out to this is what I'll have, this is what I'll do if that happens. But what if it doesn't happen? I can't buy into Arian or anybody else so hard that I'm set up waiting for this terrible move, and my strategies are already set up for it because he said it's going to happen, and it never happens. Well, then either I never trade or I'm trading the wrong thing. Either way, it's not going to be good. Okay? The 400-pound drunk guy, what's the lesson there? Guys, if you're not expecting something, it's going to shock you. It's going to knock you off your game. Trade management requires that you allow for the possibility of the unknowns. And you don't assume that just because you didn't think it was going to happen, that it can't happen. You got to allow things to happen and have them not shock you so bad that it completely takes you out of the picture, out of your game. And how do you sleep when the wind blows? Well, to me, that's trade management. If I already know what the worst case scenario is, and I've programmed that in, and it still fits into my trading plan, and it does not disrupt my overall long-term goals, and I know that I can take it 3 times in a row before I have to make an adjustment. Well, then if it happens, it happens. I can sleep when the wind blows. I'm not going to go from ecstatic because one trade just worked and we made a bunch of money and the next one went against us. It looked the same and it went against us. Oh my gosh. Oh, no. Get all mad and angry and, kick things, knock things over because it looked like it should have worked and I was counting on that and I already had the money spent. No, that's just bad trade management. All right. So guys, rules, indicators, patterns, they're all wonderful things. But the overarching principle on them is they're only as good as the last trade, the last game, the recent past. That's the essence of it. Now you got to take this market, which has been very volatile. And if what you're doing isn't working very well right now, well, that's because things have changed. If it used to work this great, it used to work. It's not working this way right now, though, as good as you'd like. Great. You investigate. You talk to other people. You do some adjustments to your strategy. You maybe even look at a different strategy. You pull your funded trades out, but you keep trading to see if I can figure this out. Maybe I'll tweak this a little bit here. I'm going to go in a little later. I'm going to add a little bit more here and then pull out quicker when it gets to this point. You can try those things. That is the whole point of the doing the virtual trading, the simulator trading. You can survive it, but you've got to be in there doing it. You can't sit back feeling dejected or discouraged. You got to be in there swinging the bat. You got to be making the trades. And it's good to have a little bit on the line. Maybe if it's only $50 or $100, something that'll kind of poke a little bit, but doesn't leave a scar, right? Doesn't leave a mark. Doesn't destroy you. It just reminds you, nope, that wasn't the right one. That wasn't the right one. Guys, last thing I'll tell you, I'm in construction. I grew up in it, and so I like doing my own work. I'm up working on this beautiful little geodesic dome that we've built up here in the Oaks, back on my daughter's property. And I'm working on some of the wiring. And my son-in-law said, well, we need to turn the breaker off. I go, no, I like to work with it live. What? But you might get shocked. I go, yep. And what that does is it keeps me real careful. And I know if I get shocked, it stings, but it doesn't permanently. It's not 240 volt, right? I don't do that with 240, but on 110, I will do that, right? And the reason I do that is because it keeps me on my toes. I know it's not going to kill me, but it keeps it real and it keeps me remembering things. I do better when I know that, oh, no, wait a minute, before you touch that, look back, oh, shoot, that's right, don't touch that one. Or make sure you're insulated before you move that, right? Guys, you learn by doing better than anything else. Well, I take that back. The only way to learn better by doing is to learn by teaching. And I'm serious about that. You think you get something, you figure it out, go teach it to somebody. Go teach it to somebody. That's where you will embed it deep into your permanent psyche. All right. You want to retain something that you've studied, go teach it. All right, guys, that's the best advice I got for you today. I hope you had a good Thanksgiving. I hope that you have a great rush out and do some Black Friday shopping. Have yourself a wonderful weekend. God bless you. I love all you guys. Really do hope that you got some value out of this today. Let's see. Read just a couple more comments. Oh, there's a couple of fun ones. Barry says shocks can hurt, but sparks can start a fire, especially near sawdust. That's absolutely, that's absolutely profoundly, huh? That's a good comment, Will. I like that. You too have a great weekend, everybody. Appreciate it. Brenda says, I'll pass on all the chaos. Right. It's just like, yeah, same here. I did it once and I thought, what's the point? I stood in, once I found the thing that I went there to save $4, I stood in an hour-long line trying to get checked out and go, what the point? What the heck was this all about? No, I pass on it. I can do it online and hit the button. It'll get to me tomorrow or the next day. That's the extent of my Friday shopping. All right, guys, God bless. Have yourself a great weekend, a great day, a great life, and we'll see you when we see you. Bye-bye.